Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. A special welcome and go to new people. And for you, I will explain in 2 words what we do here. And what we're trying to do is create a plan. And my favorite phrase the traders use, you plan your trade and then you trade your plan. So it's pretty much simple. The same thing in life, we're trying to make a plan so our actions be more organized and possibly we'll get better outcomes. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading for over 25 years. I started as a prop trader in New York City in June of 2000. And after 11 years of doing it, I moved into a different way of trading, also started to mentor and educate others. And I'm very happy to have this great opportunity to be assisting our customers at AvaTrade. So what we do here, every week, we'll go through indices, stocks, commodities, Forex. We mix fundamentals with technicals. We'll take a look at economic calendar. We'll try to talk about the major things that had happened and what to expect from the upcoming week, and the economic calendar is a big part of it. And then we'll take a look at the charts from the technical angle and try to look through those instruments that we mentioned and see how they look from technical perspective. Risk warning, you can find a full statement at avatrade.com website. And of course, everything we do here is purely educational. We do not suggest any trades, or we don't give any signals or trading signals. Social media, please feel free to follow us on Telegram, X, and YouTube. As I usually say, it's my favorite. On YouTube channel, I have a huge variety of information. You have tutorials, you have educational material, excuse me. You have webinars, including this one. So if you missed a live webinar, you can always find it being recorded and posted on YouTube. So please subscribe, click on that bell so you'll be notified of new things coming in. And of course, feel free to click the likes if you like it, share with people that might benefit from this. And also, if you have any questions, you can type them in. All right, so as we know, the last week was all about NFPs, the jobs added, and as to be expected, the job numbers came very low, and it's a 4th month in a row that the numbers are really, really low. So as we said, coming into that decision-making week, or 2 days of 16th and 17th, the announcement will be done on the 17th of September. That's the following week. And the 2 major events before that, there would be the NFP that we just had on Friday. And this coming week, we have CPI numbers, which will show the situation with the inflation. So those are 2 major things that the Feds are looking at. So the jobs didn't really do that great. It says right here, just to 22,000 new jobs were added in August, below 76.5 that were expected. Healthcare was one of the few areas where employment rose while manufacturing employment fell. June jobs numbers were revised into negative territory. So that's even worse. We saw that, all right. Also, this article here, this is all from Barron's. If you have a subscription, you can read them. I just take the screenshots, I can't copy the whole article here. Here's another one. The shares of Charles Schwab, Robinhood fell. Other brokerage firms and banks dropped after disappointing job reports, raised concerns the economy is weakening, and increased the likelihood the Federal Reserve will cut interest rates. So we'll take a look at some bank stocks when we get to the chart. It says right here, nice title, employers need certainty around tariffs, not lower rates. says U.S. employers added just 22,000 jobs, was said already, according to the latest data from Bureau of Labor Statistics published on Friday. An update to the June tally showed that the economy lost 13,000 jobs in that month. So in June, we actually had negative growth, right? We lost 13,000 jobs, bringing the 3 months moving average just to 29,000 jobs gains. If you remember, the last time they revised numbers, the person responsible for it was fired by President Trump. That weak pace of job growth all but locks in quarter percentage point rate cut at the September 16-17 meeting on the Federal Reserve Committee, putting the bank's target for the federal funds rate 4% to 4.25%. And here's the interesting thing about Google. As you know, recently Google had a nice run to the upside because the U.S. court just let go things that they let Google free, so to speak, without any further trying to break up the company. And European Union actually imposed, nearly says right here, President Donald Trump threatened a tariff investigation against the European Union after it imposed a nearly 3.5 billion fine on Google for violating digital competition rules. In social media post Friday, Trump said he would start a Section 301 investigation, which involves unfair trade practice if the EU doesn't reconsider the fines. This is on top of the many other fines and taxes that have been issued against Google and other American tech companies in particular. Very unfair, and the American taxpayer won't stand for it. As I have said before, my administration won't allow this discriminatory action to stand, Trump posted. Right, so let's see how that plays out. Now, this is the current picture of the Fed's probability of the interest rate cut. Now there's something new here, right? As you can see, the quarter point cut, it's 89%, and the rest of 11% is actually some think that we might have a 0.5% because of the low jobs report that we just had. So we usually had this one, and then no change was the rest of the percentage. Now the main 89% is the quarter, and the remaining 11%, that's the 0.5% probability. I guess we'll find out. That's why it puts a lot of pressure on this CPI numbers this coming week, which brings us to economic calendar. It's not a lot now. I remember to explain to new people, those of you that are not familiar with the economic calendar, this is public information. You can find it on our web trader or the app, or just Google it. And it's important that traders know these things, because especially during the important events, we have volatility increase and spikes on the market. So here, I take out only high impact events. You can filter through it and see what's relevant to your trading. So on the high impact event, these are the events that are coming in the upcoming week. We have later on today GDP numbers from Japan. Wednesday, CPI numbers from China. Chairman from Swiss National Bank speaks on Wednesday as well. We have PPI numbers from US, and then Thursday is going to be important. We have monetary policy statement and from European Union. Then this is the key event of the week, I would say, CPI numbers from the States, and that's on Thursday. That's 6 days before the decision on the interest rate, and press conference also from European Central Bank following the decision. Friday, we have CPI numbers from Germany and Michigan Consumer Sentiment Index as well. So these are the upcoming high importance events. There's so much more. You can take a look, like I said, and filter through them. And the highlight is, of course, the CPI numbers right before the Feds have to make that decision during the 16th, 17th of September meeting, and we will know the outcome on this 17th. All right, losers and winners among commodities. On the positive side, we had gold up 3.5%, silver up 193, Nikkei had a nice run. The Japanese index 1.88%. Among losers, the biggest one was sugar, down 483. Coffee was down 335 after a recent run. Cocoa down 3.2. Crude oil had a drop of 319, and soybeans down 2.63%. So these are the losers among the commodities, and the Japanese index is in the group as well. We'll take a look at them one by one when we get to it on the charts, and we're going to move to the charts now. So we'll start with indices, then we'll move to some individual stocks, then commodities, then FX, and we'll take a look at cryptocurrencies at the end. So as usual, we start with China, Asia, where the sun rises first, right? China is holding nicely after that recent move to the upside. We are kind of holding this channel here that was established and moved us from the previous channel. We've been in this channel for a very long time, and recently we moved nicely to the upside. It looks like we're forming a new channel here between 14,500 and 15,000. So it's about 500 points. We've been holding it very nicely since we entered this territory on August 22nd. Now, Japanese index, the Nikkei, we saw it. They had a nice run of 1.88%. As you can see here, we've been trading this descending channel here, and then on Thursday we had a nice move to the upside, and Friday we held nicely around the top of that move. So let's see if that continues. It looks good on the long-term charts. Let's see if that move continues. Now, with the US indices, we finished the week a little bit down. Not the week, but the day on Friday. So Dow Jones was the weakest. It went down 0.5%. S&Ps went down 0.3%. We're talking about the index itself. What we're looking at here is the CFDs for the futures. So S&Ps were down 0.3%, and Nasdaq was slightly down, as you could see here in the chart. Let's just make it bigger. The spike up, down, and we lost maybe 20, 30 points. Let's see, opening was 705, 27, 30, 32.5 points we lost. So out of three, Nasdaq was the strongest, and Dow Jones was the weakest. All right, so that's as far as indices. Let's say German index. German index is testing the trend line that was set up, I think, recently. We connected the two lows, and we're playing with that. We did break below 50. We did break below 100, and we're sitting here on the trend line. If the global markets will continue sliding, we might continue lower. Next retest would be here, this resistance, sorry, the support of April 1st. And if we break that, we might continue to the next checkpoint, and that's around 23,138. We were there on June 19th before making the highs. So UK index, it's holding strongly here. We're retesting the previous support here. Slowly, steadily, we came to that level. We had spike and down, spike and up. Then we're trading higher above this 9,186 level. That's the bottom of this large candle here from August 20th. So that's as far as indices Let's move to stocks, and we'll start with Nvidia, of course, as Nvidia until recently was leading the market. And as you could see here lately, it's been sliding. We did a break below 50-day moving average here at the beginning of September. And technically speaking, this is our support that we kind of held on Friday. The low of July 22nd, which was 164. What's the exact number here? 164.51. Let's set it up. 51. Okay, so that's our next support. And this was the closure of the gap and the move higher from here. So that's a serious level around 164.51. So that's on Nvidia. Now let's take a look at stocks that we mentioned. That would be Google. Had a nice run with the gap the moment it got that feeling of freedom from the US judges. But 3 consecutive days, even on Friday, when the market went down, Google continued higher. We're in the all-time high territory, so there's no reference as far as to next resistance doesn't exist. So at the gap here, right? Let's see how this play with Europe goes on. It's a serious amount, but maybe it's not so serious for Google. We're talking about 3.5 billion. And let's see if Trump manages to reverse that. And Tesla, it's over the weekend, certain ideas that Tesla wants to pay Musk $1 trillion. I didn't really understand for what. Maybe you can look it up. The stock is trying to break out here. We had actually on Friday, we had a gap opening and continuation to the upside. We didn't go down on the market going down after the NFP numbers. So Tesla looks strong here. Now banks, important to notice that we did have that negative reaction with banks on Friday. Goldman Sachs in red. JP Morgan erased 3 days of previous moves to the upside. It was a strong move to the downside of JP Morgan. Bank of America is in red. Citigroup as well. So as you could see, the banks are reacting to that job report, which triggers the interest rate cut, which, as we saw in the article or the piece of it, that might affect the banks and brokers in a negative way. So that's as far as banks. Then we have oil stocks that went down with oil. We're going to take a look at oil later, but here are the stocks. ExxonMobil sold. We came from around 115 to 109. And Chevron, we came from about 161 to 153. A serious drop in oil stocks. And we have 2 companies reporting. We still have earning reports going on. So on Tuesday, we have Oracle reporting, a serious company. Here we go. It's been zigzagging down, making lower lows, lower highs. We are trading below 50-day moving average. We had a gap on Friday. So Tuesday, they are reporting. Let's see how that affects the price of the shares. And on Thursday, we have also a pretty serious company reporting, Adobe. Lately, they're not doing so great. As you could see here, we're testing the double bottom here, which is interestingly enough, is at the same level of mid-May 2023, where the move up started from 331 to 630s eventually. So as you could see here, we've been really sliding lower here, but we are holding that a magic level here around 331. So let's see how they place, and the earnings are on Thursday. All right, that's equities. We're moving to commodities now. We'll go through that list of winners and losers, starting with gold. Gold is just flying. It's a brand new territory here on the weekly chart. I had a very strong week. Pretty much this past week we made probably identical move that took 2 previous weeks. Super strong. I think we have 2 reasons here. One is the possibility of the interest rate cut, which logically would bring US dollar lower. So that affects the positive. It gives a positive effect to gold, and of course, uncertainty in the market, possibility of sell-off, also triggers the safe haven. So we have a double impact here. Gold is on the run, up 3.5% for the week. Silver as well had a nice week here. The 3 consecutive weeks to the upside, as you could see here. We are not at the all-time highs, but I guess we are on course there. So let's see how that plays. Nikkei we spoke about. Sugar going to losers. Sugar is continuing sliding lower. We're coming closer to this support level. Let's see if that happens. It's a lot of pressure here, but what you could see, the weekly chart, as we're going lower, the volume is shrinking. On the daily, it's not. So let's see if we come to this level around 1540s. Let's see if that holds or not. Next loser is coffee. We all know coffee had a nice run. I don't know. It doesn't really look that serious here after such a nice run. So we are within the previous week. And nevertheless, it was a drop of 3.35%. Coffee is holding. After this move to the upside, we're holding in a nice consolidation here. Cocoa, it's a long story. If you were with us, you remember all this move to the upside. It looks like we are actually building some price action looking towards the south. As you could see here, this was our support. We went down, we came right back. We had a lot of action here. And let's see if we finally turn this 76, 72 level to resistance. Here we recovered very, very fast. Here we still held it. And now we had a sell-off on Thursday. And Friday we tried to recover, probably covered a third of that move. So let's see if cocoa is ready to move lower here. We're still going to have a fight between the buyers and the sellers. Now crude oil, as we said, has been selling. I think there's some news over the weekend that OPEC is looking to increase production. That could be one of the reasons. Also, things are quiet in the Middle East, thank God. So we don't see any major issues. So it doesn't interrupt the supply. And it could be that the traders already pricing in a possible slowing in the global markets after this super low job report from the States, and revision actually is much lower than was posted until now. So oil 61.40s somewhere here. It's a previous support from which we made a high, 2 high highs. It came right back in 3 sessions. Let's see what's next. And the next and the last loser for today is soybeans. After a nice run to the upside, we've been selling this week. as you could see here. And we're down soybeans 2.63%, testing the 200-day moving average here. And moving to Forex, we'll start with dollar index. We see there's a lot of consolidation around this level. We're really trading around 50-day moving average and the level of around 97.40s. And it looks like the pressure, as you can see, the 100-day moving average is slowly moving lower. And we are facing, of course, that decision of the Feds that's coming on the 17th. We have 10 days. We have CPI numbers coming, and it's hard to predict, and we're not even trying to predict here, right? But we have obvious here. We're holding so far. We're holding this level 97.40s, and we're not making any strong attempts to break to the upside. So the pressure is clearly to the downside here. Now we'll run through the major pairs. Euros, the mirror image, of course. So you could see the support is holding. We're trying to break to the upside. The same thing on pound. We are holding this support around 134s. Australian dollar also, we are trying to break through this after a huge and very long accumulation. We spoke about it, I think, last week. We have a very long accumulation, this tight channel here. So you could see we strongly held the bottom, and we had few attempts to break to the upside, including on Friday. New Zealand dollar is a little weaker. It's been trading between 200 and a 50-day moving average here, but still it is trying to break out. Dollar Swiss, which is Friday, we broke through the previous support, local support here on the daily chart. Also, it looks like a lot of downside pressure. And USD CAD had a nice move to the upside, mostly due to the weak oil. As we know, Canadian dollar is very sensitive to the oil prices. So as oil price went down, Canadian dollar went down with it. So from all the major pairs, USD CAD is the only one that is celebrating some green days here. USD yen, a sell-off on Friday. The only thing that's very interesting here, we have this golden cross is forming here, where the 50-day moving average crosses above. So some technicians or technical analysts, they consider this a buying opportunity when they see a golden cross forming, or here's the opposite, the dead cross. When the 50 breaks below, that triggers a sell-off. So let's see if that works out. That's as far as currency. So of course, the whole attention is at CPI and the following week decision with the Feds, which might push the dollar lower, and of course, the major currencies higher against the dollar. All right, let's take a quick look at the cryptocurrencies. Bitcoin. We are trading currently at above 110,000, almost 111,000 after testing numbers below 108. And XRP, if you remember, we said we held that 273 area here, support from back the beginning of August. We retested it on September 1st. Following that, we had a nice move to the upside. And so far, we are trading within that candle. So that tells us that we're still holding. And the question is which way we're going to break. Right, we did try here on the 5th of September. We had flat on Saturday, and today we're showing nice green moves. And the question is, or our indication is actually this candle from September 2nd, which way we're going to break. If we break higher, we have potential of moving higher and continuing retesting the highs. And if the opposite happens, we could be challenging this 273, and that could bring us lower and look for the next support. Okay, so let's just summarize. We'll finish with technicals. We'll take a quick look at the economic calendar again. So we have a few events. I'm not going to repeat all of them, but this is the key event for the markets, the CPI numbers that the Feds are waiting for in order to make that decision the following week. Okay, we have just summarize what we spoke about. We're going to pay attention to Google with that potential fine from European Union, Tesla, banks and brokerages, as the article said, they're being threatened with a potential interest rate cut. In general, we'll take a look at the markets as those reports push the markets lower. There's a big concern of slowing of employment, which is not a great thing. And as we spoke a few times, slow employment and high inflation could mean the stagflation. That's a fancy word that I don't know if we really fully understand it, but things could be not so great, even with the Feds cutting the rates, if we don't have jobs growth. And like I said, the banks could be also affected in a negative way. We're not going to bring in any negative mood in here. We'll just follow day by day, and that's what makes us traders, right? We don't try to build strong personal opinions and not try to predict things. So we'll follow the market day by day. We'll see the news, how they affect the market. Don't forget about our social media channels. Follow, subscribe. I want to wish everyone a good weekend. We still have some time left. Get some energy, spend some good time with your loved ones. Prepare yourself for the busy week. And of course, I want to wish everyone a successful and profitable trading week. All the best.